A great way to lay out your sales assumptions is to start from the sales funnel. So you start from the top of the sales funnel and you work your way down to find your actual sales figure. This example is based on an internet company. So the top of our sales funnel is our unique visitors. And then a little bit below that is people who sign up or subscribe to our newsletter. And then we have a percentage of those people who sign up to our newsletter who actually buy the product, and we work this out through our conversion rate. Okay, so we'll fill in the figures for year one. This example, we estimate 150,000 unique visitors. Use Google Traffic Estimator, Word Tracker, and so on to work this out. Don't pick the figure out of thin air. We reckon 20% will sign up to a mailing list. So we have 30,000 who sign up to a mailing list. Our conversion rate will be 1% of the 30,000 who signed up to a mailing list. And this will help us work out our sales figure, which is 300 units in year one. We'll do the same for year 2 and 3. And now you can see that we can change our percentage sign up rate and our conversion rate, and this number of sales will change for each year. Because as you do this, you're doing a lot of testing and measuring, and you're getting better over time. So your business plan should reflect that. Okay, the next thing that we need to do is to work out our actual sales revenue. Very easy to do. All you do is multiply the sales price by the number of sales for that year. And in this example, we're going to look at a sales price of €1,000. Now it's important when you're doing this to multiply the cells together and not multiply the figures. This will allow you then to change various things in your assumptions, and then it will have a knock-on effect then on other sheets that you're using. So for instance, we'll multiply the cell for our price for year one by the cell for a number of sales, and we get 300,000. And we'll do the same now for year 2 and 3 to work out our sales revenues. Again, I like to do individual numbers rather than, you see a lot of people in the projections, you know, something such as a percentage of sales. You get lost, the detail gets lost when you do that. So you're only dealing with three years, so it's easy to actually change the figures themselves like I'm doing here. So we'll increase our sales price a little bit. As you can see, you can manipulate the figures and change your assumptions. The next thing that we need to do is just reformat our sales revenue figures. And what we'll do now is we'll move on and look at putting our sales assumptions into our profit and loss account. So we have to open a new sheet and rename it profit and loss. The way I like to lay out my profit and loss projections is to put the 3 years beside each other, because you can see increases and decreases, and it's fairly obvious when you're looking at it. So we're just going to do the sales assumptions now. So what we do is we reference the cell in our assumptions that we have worked out our sales revenue. So we do this for year 1, year 2, and year 3. Okay, so now when we make changes in our assumptions, they are automatically shown in our profit and loss account. So if we reduce our price, our sales revenue goes down, and that's shown in our profit and loss account. Likewise, if we improve our conversion rate, the number of sales we make goes up, and again, that's shown in our profit and loss account. We look at expenses in the next video.